Today is one of those days when we get information immediately on the open. Right? Today we could have had a big gap down, and today could have been a very big bear trend day and the start of a huge sell-off. Like that, okay? Or a big gap down like this, okay? But it was not. It's a small gap down, and it's probably going to reverse up. We just closed the gap on the daily chart. Here's that gap. We just closed it. The bulls are hoping for a high two bull flag. Leg one, pull back, leg two, and a resumption of the bull trend. We already know the most important price of the day, and that is the open of the day. Big bear bar, bull body, bad follow through, we got a bounce. Big bear bar, we don't know if today's going to be a bull bar or a bear bar. If it's a bull bar, we'll probably get a bounce again. Possibly even a reversal, a high two bull flag, one, pull back two, right? But if today closes below the open, that would be a bear bar. Big bear bar, bull bar. Big bear bar, bull bar. Big bear bar tail, bear bar, bull bar. Bear bar, bull bar, right? Is today going to be different? Is today going to be a big bear bar and then another bear bar? This is already a change in the market. Since the November low, this is the first time when we've had two big bear bars in close succession. This is not particularly big, but this is the first time we've had two big bear bars in close succession. And we have a spike pullback channel, probably 60%. We're in the process of working down here toward the bottom of the channel. When the market gets a spike in channel reversal, it usually goes sideways about halfway down. Maybe we'll go sideways back here where we were in June. We're in that tight trading range now, so we may go sideways for a while here. 25% chance today will be a dramatic, big bear trend day. 25% chance today will be a bull reversal day. When you have a sell climax day, 25% chance you get a reversal day. 50% chance this kind of selling will end within the first 2 hours and will enter a trading range. When you have a big trend like this, there's a 50% chance you get some follow through selling in the first hour or two. We may go sideways for an hour and then get resumption of the selling, but 50% chance we'll get some resumption of the selling. Right now, coming in, there's a 50% chance we'll have at least 2 hours of sideways trading beginning by the end of the second hour. Because the gap is so small, I suspect that we're going to get an early rally. When I say rally, I'm not expecting a bull trend. I'm thinking today is going to be like this day, where it was a trading range day, and at the end of the day, it decided to get a bull close. Let me go back to that big bear day. Make sure I get the right day. August 10th. Okay, that was the right day. Big bear day. Yesterday was even stronger than this day, even though they're comparable in terms of the number of points. And this is what followed. And then at the end of the day, this close was above the open of the day, and it created a bull bar. So even though it's a trading range day, it's actually bullish because you have a big bear day, and then this close above the open of the day created a small bull body, and it did not confirm the selling. And the result was we got a rally over the next several days. Bears, let me see, I think they touched yesterday. No, we still have a 1 tick gap there. So 25% chance this is going to be a strong bear trend day. That means 75% chance it's not. And this is a parabolic sell climax, spike, pullback, and a parabolic sell climax. The odds are, I said 50% chance we'll get at least 2 hours of sideways trading at some point today. It's probably higher than that because this is a parabolic sell climax. So it's probably more like a 60% chance we'll get at least a couple legs up lasting at least a couple of hours. Yesterday, small pullback bear trend. So every reversal was minor, became a bear flag. We're still, small pullback bear trend, and we're still in that small pullback bear trend. But, why did we not get a big gap down? Were there a lot of traders willing to sell that one close? I don't think so. I think, if you're an institution, you can sell down here, but this is, a parabolic free fall. If I connect lows, the lines are getting steeper and steeper and steeper. So it's getting more extreme. It's going to keep falling until the final weak bull finally sells out of his longs. And once he does, there's nobody left to sell. The strong bears do not want to sell here. They want to take profits here and sell higher. And the strong bulls, they ain't never going to sell, right? The strong institutional bulls who are betting on a bounce, they're buying and they're going to hold. Even if it comes all the way down here, they'll just buy more, scale in all the way down. So you're not going to scare out the strong bulls. So all you can scare out are the weak bulls, and most of them got squeezed out yesterday. So there's probably not a lot of traders who will sell down here. Suppose fundamentally something has changed, and let's say this is not a technical sell-off. It's anticipating some major fundamental change in the economy. Then, in fact, selling here is selling high. So it looks on the 5-minute chart it's selling low, but if the fundamentals in the economy have changed and people don't yet know it, selling here is selling at a high price, and we could end up going a lot lower. But that's a low probability bet. Really important, I think, really important day. The bears have not had follow through selling in over a year and a half. So this is really an important day. This is the first time we've had 2 big bear days within a short period of time, which is different. And we have a wedge, 1, 2, 3, and a spike. And we're at a measured move on the monthly chart. So a lot of things are lining up for the bears. Weekly chart, I've been saying for 15 weeks that the odds are we have to come back to the moving average, and we're almost there. And if you look at all the pullbacks to the moving average and the bull trend, they tend to go 20 to 50 points below, and some go 100 points below. So I think that's what we'll get. I think we'll get 20 to 50 points below, possibly 100 points below. Spike in channel trend, 1, 2, 3. The market usually tries to test the prior higher lows. So it looks like we're going to come down here, 2350, 2320 or so. Monthly chart is really interesting as well. 10-bar bull microchannel, very strong. But this might be an outside down month. In April, we had a high one after a buy climax at resistance, a measured move up. Usually it goes up 1, 2, 3 bars, and here this would be 4 bars, and then it usually pulls back for a few bars. It's still sell the close, but there's a significant risk of a reversal in an early low of the day. So I'll let somebody else take that sell. Again, the most important price of the day is the open. We also have weekly support and resistance. Today's a Friday, and therefore weekly support and resistance is important, and one thing is the moving average. And we're very close to it. Looks like it's 24.15, so another 6 points down. But as I said, you could say it's a 20 gap bar buy. It's now 39 bars above the moving average. And there will be buyers there, and that might be a reason why we go sideways for a few weeks before we go down. But I think we're in the process of going down. It took several months to go up. It probably will take several months to go down. And then once we're down there, it'll be big up, big down, big confusion, probably a trading range. So we'll probably bounce and form a lower high, and everyone on television is going to be saying, oh, a head and shoulders top. But we're probably sideways for the next, who knows, 6 months or so, with the bottom of the range probably being somewhere down here. Really tight fair channel, so difficult to buy. Any reversal probably is going to be minor, except that this is so extreme, so climactic. We could get a very strong first reversal up. I talked yesterday about major trend reversals, and sometimes you get a lower low major trend reversal where the first leg up is extreme. The first leg up is always a minor reversal. Okay, so here this is actually this is a major reversal. We have a strong minor reversal here, so this is a major reversal. Well, this is a lower low major trend reversal, and this is the minor, this is the major. But a lot of times when you get a lower low major trend reversal, you always get eventually a higher low major trend reversal. But a lot of times it takes the market goes really, really high before you get the pullback to the lower low. And that's the risk when you have a climactic sell-off, that the reversal up can be very big before you finally get a pullback to a higher low. Two consecutive bear bars, confirming always in short, but the whole thing is so climactic that the first reversal up could end up being the low of the day or the low of the next several hours. Globex chart, a possible final flag, but 5 pretty good bear bars. The bulls would need a pretty good bull bar here or a 2-bar reversal before traders would take the buy. Do I think the gap above above the high of the day is going to close? Yes. I think we're probably going to get an early trading range, which means we'll get an early reversal, and the reversal up could be pretty sharp because of how steeply down this is. Possible low of the day. I don't think anybody should sell. All right. I'm not opposed to buying, but the problem is the math. You're buying a reversal from an extreme sell climax, and you don't yet have a really good micro double bottom. The market went up on 3 and then down on 4, up on 4, so it's a possible low of the day. I think today's has a 50-50 chance of spending most of the day in a trading range oscillating around the open, and then in the final minutes deciding whether to close above or below the open of the day. So this is an okay swing buy, a failed breakout, yesterday's low, and a sell climax, but not yet high probability. I would rather that we get one more plunge down and then a reversal up, but because this is so extremely oversold, this might be it. This might be all that the bulls get. What do you do? Well, you either wait until we get a couple good-looking bull bars and then buy closes, even though it's a minor reversal, right? Because this is so extremely climactic, the minor reversal could go up, 5 or 10 points, like this. before there's any kind of a pullback. If you get that, then we've probably seen the low of the day, and we're probably going to get a bull trend. I think we will not get that. I think we're going to get like what we got last week, this kind of a thing, where you got a rally, oh, it's disappointing, a rally, disappointing, and then a trading range. We might be always in long. The context is really good for the bulls. Not a great buy signal bar, 3. Not a great entry bar, 4. Neither one has a big body. Both have prominent tails. But because everyone knows this is unsustainable, the sell-off is unsustainable, traders are looking to buy. I think most traders want some kind of a double bottom, like one more test down and then a second reversal up. But in a day like this, when everybody knows the odds are we're going to be sideways for most of the day, if not all of the day, we may not get, in other words, everyone wants to buy, right? We may not get that second test down. I'm hoping that we do. For the bears, every reversal has been a bear flag. So this is a reversal, and it's not a strong reversal, so technically it's a bear flag as well. But, why did we not get a big gap down? Why did we not get a big gap up and then immediate sell-off? This is not, the bears they could have done a couple things to make this much more bearish. They could have had a huge gap down, did not. They could have had a big gap up and then a reversal down, they did not. And what we have instead is confusion, uncertainty, and this increases the chances of what I'm saying, that today is probably going to be a trading range day, and the open of the day will probably be the most important price, especially in the final hour. And then at the end of the day, the market will decide whether to close a little bit above or a little bit below the open. It's really interesting how just in the first minute, you have information. The market's telling you something about what the day will probably do. Low one short. Do you want to take that short? If it's so bearish, why did we not have a much bigger gap down? Probably buyers below 4. So I would not take that short. If we're lucky on bar 6 or 7, we'll get a decent looking bull bar, a 5-tick bull body, 6-tick bull body closing on its high. And that would be a reasonable swing buy for a possible low of the next several hours. Again, usually a strong bear trend does not become a strong bull trend. A strong bear trend usually becomes a trading range. Although the first reversal up can be strong, it's still a minor reversal. So it could be like this, but it's still a minor reversal. Weekly moving average. Suppose we get a bull IOI, that would also be a buy. The odds are today's going to be a trading range. it'll keep going down until every weak bull has finally given up. Weak bulls, they buy every reversal, and they have to sell when there's no follow through, when nobody buys after they buy. I would wait to buy. I'm not selling here. I want to buy, but I only want to buy if we get a very good looking bull bar. Otherwise, I'll wait to see if we get 3 or 4 consecutive bull bars or 2 very big bull bars on a big reversal up. I'm not selling here. Can you simply buy at the market and use a measured move down based upon the height of those 2 bear bars where you stop? I want to buy, but I'm not willing to buy yet. So, I need a strong buy signal bar or several consecutive bull bars. And I'm only willing to sell a pullback when the sell climax is this extreme, so I'll just let it go. I'm still holding some VXX, which is an upside down version of the E-mini. It's a volatility measurement. It measures the VIX. So it's usually an upside down version of the E-mini. So in addition to buying puts, I like to trade this to buy this if I think the E-mini is going down. $60-minute chart, we have that double top lower high. There's the neckline. Measured move target is right below that low, so that's an obvious magnet. I think we're going down to these lows, but it might take several months to get there. If we get here, which I think we will, we'll probably do this for several weeks, and then the bulls will see a double bottom, and the bears will see a head and shoulders top, left shoulder, head, and then when we bounce, we'll get a right shoulder. Another consecutive bear bars, but what's different this time is this is the second reversal up from below yesterday's low. So while 3 was a low probability buy, if 7 closes on or near its high, even though we have those 2 big bear bars, it's a higher probability buy. Sometimes you get a third push down to a wedge. But I think eventually you run out of sellers. The strong bears will sell, trying to flush out the weak bulls. But at some point, the strong bears will stop selling because they know the odds of a significant reversal are getting pretty high. Again, I think today's going to oscillate around the open of the day. Therefore, the open of the day might be the middle, and that means we may come up here. This might be the trading range that we get today. Tough buy, right? But as I said, I would not sell. So I think, this could be it. This could be the low of the day or the low of the next several hours. Usually better to buy above a bull bar. 7's a bull bar, but it's forcing traders to buy very high up. $15-minute chart, possible final flag reversal. 6 consecutive bear bars, but it's a climax after a series of climaxes, Normally you would not buy the first reversal up after 6 bear bars, but this is so climactic following such a strong climax. I think the odds are we're going to go up to above the open of the day. All right, so if we get one more bull bar that looks like 7, then I think we'll be clearly, I think we're probably always in long now, but that if we get one more bull bar that looks like 7, then we've probably put in the low for the next 2 or 3 hours. For the bears, double top bear flag 4, and I said bears should wait to sell a pullback, but this is not enough. I would wait, for 10 bars sideways to up before thinking about selling again. Will the bulls get a bull bar? Will the bulls get a big bull bar? Will the bears get a big bear reversal bar? But even if they do get that double top, I still would not take the sell. After this much of a climax, a lot of the bears will wait 5 or 10 bars or more before thinking about selling again. I think we're always in long, and 50% chance we've seen the low of the day. Tight bear channel, minor reversal, but it could be a very big minor reversal before the bulls get a high or low major trend reversal. Open of the day, a reasonable midpoint for the day, and that would take us up here around the low of last week. Again, I think the open of the day is probably the most important price of the day. Remember yesterday we had a very big double top, double top here or double top here. Unlikely to get a measured move down, yet we fell many times more than a measured move down. The bear's trying to get a double top here or here. I would not sell. I think we're always in long, and I think we'll probably go sideways to up for 10 or more bars, possibly for 2 or 3 hours. Bull bar, I think that confirms always in long, and probably buyers below 8. The bears want the double top, break below the neckline, fall for a measured move down. They have maybe a 40% chance of that, 60% chance of not. It's important that 8 has a big tail on top and that 8 is not a huge bull trend bar. That increases the chances of what I said, that today is probably going to be a trading range day. It's reasonable to sell that 6 high. Therefore, you have bears selling the high, using some wide stop and scaling in higher. And they're looking to get out now back at the 6 high. They're disappointed by the reversal, and therefore you have bears trying to buy there. It's also about a 50% pullback, so there probably are buyers right around here. We might come down and test the 2 low again, but I think we'll probably come down somewhere here or here. Yet I also think we'll probably form a higher low. So 40% chance this is a double top bear flag that leads to a swing down below the 6 low. 60% chance it will not lead to a swing down below the 6 low. For the bulls, always in long, high 1 buy, but tail top of 8. You still need a stop below 6. Not a good buy signal bar. Again, increasing the chances that this is going to be a trading range day. What about 20 gap bar bears selling at the moving average? This is so climactic. This is the sell zone, right? We're around the open of the day, the moving average. But I think the bears need a pretty decent sell signal bar. The bulls are hoping for a breakout here, but that tail on the top of 8 and then the doji on 9, I think increase the chances of confusion and sideways. Stop for the bulls, still below 6. Good location for the bears. Limit order bears selling, trying to get back down to that 6 high. However, if we do get there, probably buyers around there and around the 2 low. So this may end up being a scalping type trading range open. After the first bar, we reversed up twice, and now the bears are trying to reverse down. That creates a breakout mode environment where theoretically bears would sell below 6, and if we reverse down below 10, theoretically bulls would buy above 10. 60-minute chart, spike, pullback, parabolic sell climax. Bulls trying to get a bull close on the bar. Bears would like it to be another bear bar closing on its low, but not likely. What do? Do you sell below 10, betting on a trading range? Do the bulls stay long? I think it's difficult for the bulls to stay long. It's low 2 at the moving average, and it's a double top with 1. So I think the bulls get out below 10. Bears can sell, but it's probably, at best, I think we're always in long. So I think it's not a great sell. Excuse me. And there'd be buyers below 10. We're always in long, right? There could be, but I would not buy there. I think it's okay to get out of longs and then wait. And for the bears, I think it's an okay short. For the bears, they have a double top, opening reversal at the moving average. But their problem is this, a parabolic sell climax. So unlikely to fall very far. More likely the best the bears get is a trading range. Getting near the end of the first hour, bulls trying hard to create a good buy signal bar on the 60-minute chart. When you get a decent sell setup like this, we have a double top, we have a low 2, we have a wedge, and you have a decent sell signal bar, and it does not trigger, that's bullish. So if the bulls can keep it from falling below 10 and instead break above 10, we could get a measured move up. I still think it's okay to get out of longs below 10, but I also think even though it's, for the bears it's an opening reversal, a 20 gap bar sell, rally to the moving average, I still think the odds are there'll be buyers below. I originally had a stop order to sell below 10 and I pulled my order. So far, I'm scalping because I think a trading range is likely. By bar 7 or 8, you have at least a 50% chance that we've seen either the high or low of the day. I think it's more likely that we've seen low of the day. Globex market, about a 50% pullback. 6 consecutive bear bars makes it hard for it to go up without pausing. Right now, I think it's likely we'll test the 6 high. 20 gap bar sell, bad buy signal bar 6, consecutive bear bars 5, 6. So it was reasonable for bears to sell above 6 and scale and higher, so they should be able to avoid a loss. The 60-minute bar complicates things. I think the bulls will try to get the 60-minute bar to close somewhere in its upper half. So that's 2.5 minutes from now. You can see everyone, it's not collapsing. That's telling you that traders believe it's always in long. And that's why I chose to I changed my mind about selling below 10. I wanted it to fall pretty quickly on 11, did not. Now the 60-minute bar's close is influencing the market. It's also a reasonable short, so chances are the bears will make a scalp. But I do think there'll be buyers around that 6 high and 2 low. Close of the first hour, a bear body, but a close above the midpoint, so a reversal bar. Unlikely for a very tight bear channel to become a bull trend. More likely the first reversal up will be minor. Bears probably buying here around 6 high. They scaled in. They sold more 1 or 2 or 3 points higher. With a range big like this, it's probably more like they're trying to sell 2 and 4 points higher. Then they sold below 10, the wedge with 4 and 8, and they got a 20 gap bar sell as well. But so far, a lot of reversals today, down and up and down and up and down. And it's consistent with what I said, that I think this is probably going to be mostly a trading range day. Bears buying back shorts around the 6 high, and the bears are scalping. The bears are sold below 10. A lot of them will take 2 points profit, and the bulls hoping for a higher low, which they probably will get. 40% chance this is a double top. We break below the neckline and fall for a measured move down. Again, I think the open of the day is the most important price. And when you have an obvious important price, the market often oscillates around it, and that price is often the middle of the day. And that's why I have this measured move projection up here. Consecutive bear bars, but tail, the bears were buying at the 6 low. And some of them are taking profits around the 2 low, and bulls are doing the opposite, betting on a trading range. We have a higher low, but a minor reversal, and also 13 is a bear bar, and makes me think that we probably have to test back down and get maybe a micro double bottom over the next few bars. I think we're still always in long, stop below 6. And I think there are buyers below 6 as well, because I think a trading range is likely. Remember, after the first bar, we sold off and reversed up. We went above the first bar and reversed down. So it's breakout mode for a measured move up or down, and I think up is more likely because of the extreme sell climax. I have the measured move drawn from the open of the day to the low of the day up here, but technically it's a breakout mode day, and the measured move for some traders will be based upon the low and high of the day, which is a little bit above the target from the low to the open of the day. Weekly chart, good bear bar so far, but if we get up to that target, that is the low of last week, that could result in this week having a big tail on the bottom of the bar. I'm not sure that we'll, although we might get up there, I don't think we're going to close up there. I think if we do get up there, we'll close back around the open. A lot of the bulls want a micro double bottom after the two bear bars. And sell 13 high, betting that we'll get a small second leg sideways to down. I would not. I think we're still always in long. So that's too low to sell. High or low. On the open, sometimes you get major trend reversals that are small. You know, we only rallied 4 bars, 5 bars, and we sold off 4 bars or so. But this is a higher low, and because it's the open, it could be a major trend reversal. Plus, you know, I think we're always in long, so it's an okay swing buy. What's more likely? More likely we'll have to get a double bottom. Too many bear bars and then bear bars here. Still always in long. You know, those 2 bear bars, 12, 13, made it likely we would test down. The bears are still hoping that we break below the low of the day. But even if we do, I still think there'll be buyers below. I think we're going to rally. We got back to yesterday's low on the open, and then again here. I think we're still always in long. But like I said, I thought today was going to be a trading range when we had that open. You know, instead of a big gap down or a big gap up, I thought we would end up in a trading range. Now, I would not buy above 13 or 14. However, 17 is slightly higher probability. It would be better if 16 was a perfect double bottom with 13 or fell a little bit below 13, and therefore 17 is not as good as the bulls want. We may get one more push down to the 13 low or below the 13 low. Tough call, right? We're always in long. Not high enough probability for a scalp above 17. I think there's a 50-50 chance that we're going to go down to the 13 low, maybe a little bit below. We're right at the moving average. The market failed there several times here. We have a tail on top of 16, not good. And we did not correct all the way down to the 13 low, not good. So always in long, but if you're buying, it's a swing. I'm not buying above 17, but if we break strongly above the moving average, I may buy the breakout or the close. I still think it's more likely that we're going to go somewhere up here at some point today, and that today is going to end up as a trading range day, closing around the open of the day. It still could be a bull trend day. We could get a measured move up. Less likely, it could we can get a bear breakout and a measured move down. I say less likely because the selling has been so extreme. You know, extreme selling. Eventually, you run out of sellers at this price, and the sellers want to sell higher, or they want to sell after a lot of bars. They want to give the bulls a lot of time to create a major trend reversal. If the bears see that the bulls are simply unable to create the major trend reversal, the bears will be willing to sell at this price. So maybe 5 or 10 bars from now, we'll get a double top over here. That tail is important, right? It weakens the buy signal bar, and I think the 13 low is not adequately tested, and that makes a lot of traders not willing to buy the 17 high. And the bears, look at the tails at the moving average, right? Bears have been selling near the moving average. They're still hoping that this is a bear flag and we get one more push down. They know there will be buyers below the low of the day. They don't care. All they know is they can make money. They're betting that it'll get down below the low of the day. If it does, then this could be the final bear flag, and then we could get a lower low major trend reversal. So it's still okay to be swinging a short stop above 10. As far as swinging along goes, it's still okay, but I am flat. I want to see a better bottom. I want to see a double bottom with the 13 low. Or I want to see a very strong bull breakout. The bulls had a good reversal on 7, bad follow through 8, and then here. So I think it's 50-50 chance that we're going to get a higher low, 50-50 chance we're going to possibly break below 6. In other words, 50-50 chance this is a bear flag and we're going to test down. It might test down to a higher low. It might test down to a lower low, but I think 50-50 chance we're going to get a bear breakout here. Triangle. $60-minute bar. Bulls had a reversal bar in the first hour, it closed above the midpoint, but a bear body. They're hoping that this hour is a bull bar, so they have a micro double bottom and a bull bar for their buy signal bar. There's still time left for the market to trade down and then trade back up before the second hour closes. I think those two things are a real problem. 16 did not get close enough to the 13 low. 17 has a big tail on top. When you have a bear trend that's trying to bottom, if you get a significant reversal up, if you're going to get a swing up, usually you have something that's clear. And 6, 7, not good. 3, not good. 13, not good. 17, not good. So we don't have a good signal bar, and the breakout 7, 8, not big enough. So we do not have a strong breakout yet. And therefore, traders are hesitant to buy. They want a better setup. We fell below 16. We got to within 3 ticks of the 13 low. But still in a tight range. Now, can the bulls get a good buy signal bar? 20. They have the double bottom. When you have a triangle, 50% chance the breakout reverses. This is the breakout, so 50% chance it'll reverse. 50% chance it'll go for a swing down. Triangle late in a bear trend, so probably the final flag, whether or not we fall below 6. I have the measured move drawn up, but as I said, we're in breakout mode. After the first bar, we have a new low that reversed up and a new high that reversed down, and theoretically 50-50 chance we break below the low and 50-50 chance we break above the high. in general, you've got to be thinking in terms of a measured move. While the range is already pretty big, it's about whatever, 7, 8 points. It still probably will get bigger because yesterday was so big. Are we always in short yet? Might be. If this bar closes on or near its low, we're probably back to short, but we're still in a breakout mode situation, and I think the downside is probably limited. So this will probably end up as the final flag, whether or not we fall below 6. All right, so now we have a wedge higher low, 3 pushes down, 9, 13, and 21. This is better for the bulls. If it closes on its high, it's a reasonable swing buy for a possible low of the day. We still have 30 seconds left, but I think it's an okay buy if it closes on the high or even a 1-tick tail on top. If it has a 2 or 3-tick tail, it's still possibly the low of the day, but it's a lower probability buy. Oh well, I wanted it to close on the high. I was going to buy it. I had my finger on the button, but I wanted to close on the high. It's still, I think, an okay buy. We're still probably always in long, but why could the bulls not create a better buy signal bar? That's a problem. It increases the chances that this is going to be an endless pullback from this reversal up, and then we just keep channeling down. Trying, right? Not a great buy signal bar, but the context is very good for the bulls. Fail break out of the triangle, higher low major trend reversal. $60-minute bar closes in a few minutes. Bulls trying to get some kind of a 2-bar reversal, consecutive bull bars or consecutive bars with big tails below. Everybody's buying here, right? Traders are concluding that the bears were unable to break below the low of the day, and therefore we're probably going to break above the high of the day. Remember, we were in breakout mode. This is the breakout, this low, that high. We tried to get the bear breakout, and instead we reversed up. Good bull bar. It would be not, the bulls would like to get a follow-through bar. They want the day to change from a trading range day into a bull trend day. I'm not sure that it's going to be a bull trend day. I've been saying from the open that I thought today would be a trading range day that probably would oscillate around the open of the day and then get back to the open of the day at the end of the day. I still think that's true. What happens if we break above 10? Well, theoretically, the goal is a measured move up, but with all of this trading range price action, I'm not sure that we'll get up there. In the absence of good buy signal bars all day, here, 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 and here, and here, I think also reduce the chances of it becoming a big bull trend. But I think, it looks like we'll probably get a rally here. The bulls need a follow-through bar, 23, and they need a breakout above 10. Can the bears sell above 10, arguing a wedge, 3 reversals down, 1, 2, and then 3? I would not. If we get a big bear bar, maybe. This is due to a lot of the bulls who did not buy above 21, and it started to go up, and as it started to go up quickly, they just bought at the market. It tells you that the bulls want to buy. Important bar, will the bulls get a follow-through bar, or will the bears get a reversal? I think this is important. Will the bulls get a bull follow through bar after the 22 bull breakout? And what do the bulls do? A lot of the bulls, when it's in a trading range like this, I typically, if I buy, I usually scalp at least half off, just in case the trading range continues. And then if it reverses, I get rid of the rest of the position. And as far as reversing to short, I don't like to reverse. Sometimes I'll do it, but I'm not going to do it here. Let's say it's a 1 or 2 tick bear body. What happens? Well, it's probably okay to get out of longs below, but there probably will be buyers below. It's really interesting. They're fighting over the close of this bar. The bulls want the absence of a bear body, and the bears want at least a 1 tick bear body to weaken the bull breakout. Possible the triangle could grow. We reversed up from above the 6 low. We could reverse down from below the 10 high. You can see the last tick, they're not going to tell us until the final seconds. Okay, so bear body, bad follow through, but I still think always in long and probably buyers below. Where do the bulls get out? Well, tough call, right? Probably buyers below, so they can hold long, stop down here, or they could get out below and then buy on a reversal up. Again, 60-minute bar closes in 5 minutes. Bulls trying to get a bull bar, spike and parabolic channel, micro double bottom. Bulls are not expecting a bull trend, but they think that we could retrace a good chunk of it, maybe get back above that low, up to that low. Breakout mode, and we got the bull breakout. Now, can the bulls get a gap? Can they get a close above 10? Can they get consecutive bull bars? Can you move your stop to below 24? Well, if this is going to be a bull trend, it should not come back below the 24 low. So I think it's okay to do that. And if you get stopped out and it starts to reverse up again, you buy again. So the bulls failed their first test. They got a bear bar 23. Now they have another test. They're trying to get a gap above 10 for a measured move up. Low of last week. This is where we are right now. And that is the next target. That's the next resistance area, the next major resistance area. And it's right around the measured moves based from the low of the day to the open of the day, or the low of the day to the high of the opening range. This is also a breakout of the range of the first 18 bars. And that means 90% chance we are not going to get down to the low of the day. We could still end up coming down deeply and getting a trading range day, but 90% chance we will not get all the way down there or here. With everything being big, instead of taking profits at 2 points, I take partial profits at 4 points. One objective is to measure move based upon the height of this body, the breakout, and we're right around there. And we have other targets above. We're also testing yesterday's close, so you always have some profit. I took partial profits here. And you always get some profit taking there as well. Now, you have limit order bears who sold the 10 high, betting that we have had so much trading range price action, we probably will come back down to the 10 high. There's a 60% chance we will fall one tick below the 10 high at some point today. Not necessarily now. It could come 3 hours from now. This looks like a trending trading range day. A trading range and then a brief breakout, 3 bars, 4 bars, 5 bars, and then an upper range. When you have a trending trading range day, 60% chance, even if you have a strong breakout, 60% chance at some point during the day, the market will fall at least one tick below the breakout point, the 10 high. Can you sell below 25 for the failed breakout? I would not. We could drop all the way down to the buy climax low, the 24 low, but I still think we're always in long, and I still think we'll probably get at least a small second leg up. So it's a low probability sell. Sometimes when you get these breakouts of the opening range or the first 18 bars, you get a pullback, a deep pullback. And if you get that, then you got to be thinking trading range. Similar to today, breakout, went sideways a lot of bars, not much follow through, but sideways, breakout, broke out a second time, deep pullback, never got down to the low of the day. So even though it did not become a strong bull trend day, it was still sideways to up. And I think that's what today will be, sideways to up at a minimum. Here, breakout, sideways to up, strong breakout, and it became a bull trend day. Strong breakout, huge bull trend day. Here, we broke above the bar 18 high and reversed down and broke below. Okay, today we have a very strong breakout. This is only a very tiny breakout right here. So this is not like today. Here's another failure. This occurred just the other day. We broke out above the 18 bar high and pulled back deeply. We got another new high and reversal down. Today the breakout looks much stronger. Again, a little brief breakout above the 18 bar range and reversed. Strong breakout above the 18 bar range and reversed. But I still think today looks more like, that or this. It's a much stronger bull breakout. I still think we'll go sideways for a couple hours, and today will probably be a trending trading range day. But right now, I don't see a reason to sell. The first hour, second hour, bar 24 closed on its high. We probably have to go above its high, to see what's there. 60-minute chart, reversing up from a spike and a parabolic sell-off. Magnet above, probably have to get above this bar at a minimum. Since there's a 60% chance we're going to drop below the 10 high at some point today, can you sell at the market and use the stop above the measured move targets up here and sell more higher? I would not do that. I think the math is probably okay, right? You can look at it this way. You can say, okay, Al says we're going to get below the 10 high. This is where we are now. So sell at the market and put a stop above the measured move up from here. If you're selling, I would not sell, but if you're selling, I think your stop has to be above the measured move targets, so somewhere up here. Minimum stop, the bottom of the biclimax low, 24 low. If it comes down there, that is bad for the bulls, right? It increases the chances that, we've already begun to enter a trading range. The rally looks stronger than this, so I think this is, it's more like this. So if we get a trading range, we probably will not get a deep pullback. A breakout never got below the breakout point. A breakout never got below the breakout bar. A breakout got down to the breakout low, but found buyers. Did not reach the breakout bar low. If a trend is good, if it's going to be a trend, it usually will not fall below the low of the breakout, the most recent breakout bar. So if this is good, it will not fall below the 24 low. Bears hoping for two-leg trap, first leg up, pull back, second leg up. But bad sell signal bar 25, probably buyers below. Remember, you got scale in bears who sold 10 high and or 2 or 4 points higher. I think the range is too big to be going for 1 point and 2 point moves. I think everything is doubled. So instead of 1 point scalps, it's 2 point scalps. Instead of selling 1 point above 10, you're selling 2 and 4 points above 10. Probably buyers below. Probably at least one more small second leg up. We're trying to get above that 60-minute high, which is the high of bar 24. Probably trading range day. So trading range, brief breakout for a few bars, and then trading range. Trading range breakout lasted about 5 or 6 bars, and then sideways for a couple of hours. We got trend resumption up here. II, always in long. Minimum stop below 23 or 24. And for the bears, I think it's too early to sell. You probably have to use a wide stop. Dojis, not strong bear bars. It's a reminder that today's a trading range day. Even though we have a bull breakout here, we probably are going up a little bit higher. Bar 7, great bar. Bar 8, tail. Bar 22, great bar. 23, bear bar. 24, great bar. 3 dojis. So we're getting bad follow through after good bull bars. And if a day is going to be a bull trend day, a big bull trend day, typically you get consecutive big bull bars, not big bull bars and then bad bars. So always in long, 90% chance we've seen the low of the day, but this is probably the start of an upper range. So, maybe a little bit more and then pull back and then, here sideways for a couple of hours. But a similar type of thing, bull bar, weak follow through, bull bar, weak follow through, bull bar. Eventually the bulls stopped buying high. They waited 10 bars to see if the bears could reverse. When the bears could not reverse, the bulls bought again, but they suspected that these bars mean a trading range. The bad follow through after the bull bars makes a trading range likely. So the bulls started scalping and taking profits at the prior high instead of holding on to longs. Ultimately, we went higher, but it's a similar kind of thing. I think of the examples I have, this is the one that's most like today. We're in the target zone, but pretty good momentum. So bulls are still buying, not selling yet. I just went flat. looks like a lot of other traders went flat as well. The chance of a bear trend out of this is small, at least for another hour or two. Do I still think trending trading range day? I think probably. We have a trading range, we have a breakout. It looks big when you just look at today, but when you compare it to yesterday, it's, not much. Possible final flag, that II, but strong enough breakout. 29, a lot of the bears will want at least a micro double top. A lot of the bulls, I think, will wait to buy. Maybe they'll buy at the market or below 30 for one more push up. I'm flat, and I think it's probably a trading range. So if 30 has a bear body, probably sellers above. We're at the measured move based from the low of the day to the open of the day, right there. From the low of the day to the top of the opening range, a little bit above. And then the low of last week. Weekly chart, here's the low of last week. I said we could get up there, but later in the day we could close back down to the open of today, and the tail on the bottom of the weekly bar will be much less prominent. Daily chart, I said the bulls wanted a high 2 buy, 2 legs down, 1 pullback 2, and the bears at a minimum want a bear body. Right now it looks good for the bulls, but the day has not yet closed, and I still think the open of the day is a magnet. Unlikely to get there for at least 2 or 3 hours, but if we start to go sideways, the bears will see a major trend reversal and they'll sell, trying to get the market back down to the open of the day. Trading range likely, and therefore bulls will start looking to buy pullbacks instead of breakouts. And this is a high 1 bull flag 31 or bar 30, but if you buy it, you have to make some really quick decisions because we're at a resistance level, a measured move target, low of last week, and we've had bad follow through after bull bars here, and probably here, and now we have tails growing, small tail, bigger tail, bigger tail. So the rally is, while strong, I still think a trading range is more likely. Trading range day, trading range, brief breakout, and then another range. Trading range, breakout, and ultimately, despite a strong breakout here, ultimately became a trading range. Strong breakout became a trading range. Strong breakout, strong breakout, strong breakout, and this is probably the closest one because we had a very strong breakout, bear bar, strong breakout, bear bar, strong breakout. So this is probably what the next 2 or 3 hours look like. Is there anything the bulls can do right here to make me buy? No. Even though I think we'll get a little bit more up. If it's a bear bar, probably bears will start selling above bars, betting that we'll start doing this. Here we have 2 big tails before we enter the trading range. And here, this is not as two-sided as this. What about limit order bears who sold the 25 high? Well, they'll probably make money, but it might take a while for the market to get down there. So here's the high one buy, probably at least a little bit more up, but probably not much more up. Some bears sold the close of 30. They're so eager to sell that they sold the close of 30. Bulls is still always in long. I would get out. I did get out. I had a sell limit order to sell the 30 high, did not get filled. You can call it a parabolic wedge. It's still, I think, technically by the close 29, and therefore this is probably a bear leg in what will become a trading range instead of the start of a bear trend. The by the close bulls 29 probably will be able to make money if they scale in lower. And what about the sell the high bears 10? Will we still get down there? Even though we have a strong rally, I still think 60% chance, might be 50% chance now that we've rallied so strongly, but maybe 50% chance we'll dip below its low. Obviously, we're on the verge of dipping below the 24 high. So the limit order bears who sold above 24 are about to make money here. Weakens the bull case. Probably entering a trading range, upper trading range like this. So we're probably, buying low, selling high, and scalping. Now, can we just keep going down all day? Not likely. This is probably, I've been saying, for an hour, trending trading range day. This is probably a bear leg in a trading range. And this is a potential final flag, so it's a magnet. The bears want to get 3 consecutive bear bars, so guess what? Bulls buy the 31 close, trying to prevent the bears from getting a 3rd consecutive bear bar. But big enough, big up, big down to generate confusion, and just based upon this alone, we should go sideways. But I thought based upon this, we were probably going to have a breakout and a trading range. Support below, bottom of the most recent buy climax, 28 low. Final flag, moving average. The top of the lower range, yesterday's close. So this is all a likely area where bears will take profits and bulls will start to buy. Bulls trying to prevent the bear body. Everyone knows that 3 is kind of a magical number on reversals. This is similar to what we had over here. 2 bear bars. The bulls prevented a 3rd bear bar. We got a little bit more down, but then the buyers came back. So I think what we have is similar. 2 bear bars and bulls trying to get a bull bar. Strong enough down, got a little bit more down, but not much more down. Still always in long, so this is a breakout pullback buy, but big enough down so that we've probably entered a trading range. The bulls did the minimum that they needed to do. They prevented a 3rd bear bar, but this is probably a trading range. Will bear sell 32 high? I don't know. I think it's kind of low to sell. As I said, I tried to sell the 30 high and obviously did not get filled. So it's probably better to be looking to buy maybe a small second leg down to the bottom of the final flag and the moving average. So if we get a second leg down and a reversal like this, 1 leg down, pause, 2 leg down, and a reversal. Here we went to a new high. I don't know that we'll go to a new high today. I think, we'll start to go sideways. But this is what we might get. Pause and second leg down. By the closed bulls, 31 just got a 1-point scalp. Well, as I said, the range is pretty big, and it's probably better to be going for 2-point scalps until the bars start to get smaller. How far down do we go? I still think a trading range is more likely than a bear trend. It's always possible that you have a second leg trap, leg 1, pullback, leg 2, and then you just sell off all day. But I've been saying from the open that I thought the open of the day would be a magnet and that we'd probably oscillate around it. If we sell off, I still think 90% chance we will not get a new low of the day. So probably the best the bears get is a test, maybe down to the open of the day, the 24 low. Are we still always in long? I still think we're always in long. Here's a bear second leg trap. Another second leg trap, 1 trading range, and then 2 down. 1, 2. Lots of second leg traps here. Some are small. Tried to get a bull flag, got a bear breakout for the second leg, and it traps bears into thinking the day was becoming a bear trend day. This is, I think, similar to today. A strong rally, and the bears tried to get a reversal. Second leg trap here, 1 pullback, 2. Today, 1 pullback, 2. Bears trying to get the reversal. 1 pullback, 2. And the reversal down. Bull flag, bear breakout, but higher low. So I think this is the best the bears will be able to get. If they get this, I don't even think they'll get this kind of strength, but they might. Anyway, since this is the best the bears can get, I'll leave it there, but I don't think they're going to get that. I don't think they're going to get a strong second leg down. They might have 2 legs up, 1 pullback, 2, but I still think more likely this is a bear leg in a developing trading range, and we probably will bounce before we go much further down. You can see the bears had a decent bear bar 31, terrible follow through 32. Here, the bears got bear bars with good follow through. So much more selling pressure here than what we have going on here. High 2 buy, but not all that bullish. Starting to get small bars, doji bars started over here. So this is a logical bottom. Just like over here, I said this is, might not be the low. We'd have to go a little bit lower. The same here. This might not be the low. We may have to get a little bit lower. I am currently flat because we're probably in early stages of a trading range. Bears are selling. They're selling the 35 high, a bear bar. They're selling the 33 high. They're using wide stops, scaling in. Stops, maybe have to be fairly wide, maybe a measured move up, somewhere up here. Bulls who are buying for any reason, like the 34 low, are probably scalping out because look at the bars. 3 dojis here, 3 dojis here, lots of little reversals. So we're probably in a trading range, and in a trading range, traders try to buy low, they sell high, and they scalp. We're still always in long. Still always in long, but this is probably what we're doing. This day, much more intense, tight trading range, lots of overlap, all the bars are just sideways. So it's much more two-sided than today. Today's slightly more bullish than this. But if we do get to a new high, probably sellers above. "15-minute chart, a bull breakout above a trading range and a pullback. But a tight trading range like this is a magnet, and this is not a strong breakout above that range. We have a tail and then a bear bar, and therefore, probably not going much higher. Day session 15-minute chart, same thing. A 20 gap bar short, stalling at the moving average, probably not a lot higher if we do go higher. 60-minute chart, a strong bear channel like this usually does not become a bull trend. And if it does go up, let's say it goes up 5 hours all the way up here, it's still probably a minor reversal. And the bulls will still probably need a reversal back down, a resumption of the bear trend, and then an attempt at a major reversal. It's possible, it's always possible you can just rally abruptly, but chances are this is a minor reversal. Can you buy as the market's going up because it's a surprisingly strong pair of bull bars? I would not. This is probably a bull leg in a trading range. This was a bull leg in a trading range. Bear leg, not bull leg. Good pair of bull bars, so probably the first reversal down, bulls will buy it. The bears will probably need a micro double top, but probably not much more up, and bears will start selling above bars, maybe above 35, above the high of the day. What happens if we break strongly above 29? Sometimes a trending trading range day can have 3 trading ranges. So trading range, breakout, trading range, breakout. That's rare. Usually it's a trading range breakout and then trading range. And if you break above the top, it fails and it just becomes a higher high in the trading range. Probably buyers below. The bears will probably need at least a micro double top. What about the limit order bears 35 high? Well, they'll probably make money. It's similar to the limit order bears 6 high. They made money as well, but they needed to get a micro double top before it got back below the 6 high. And the 35 bears probably need a micro double top as well. When you buy up here, I did not, and I did not sell the 29 high. I'm flat. Look where we are on the weekly chart. Back to the close of last week. It's possible we get all the way back to the open of last week, but not likely. Okay, close of last week, open of this week. Let me see. That's 15 points above where we are to get back to the open of the week. Right now the week has a bear body. Do I still think trending trading range day? No, not with this bar. So now, well, I still think we'll end up in a trading range. This is much stronger than the bears should have allowed. Getting all the way back to the close of last week. Strong enough up, traders are buying the market. Parabolic sell climax. So it's like a spike in channel, small spike, big channel. And the top of the channel is also a target. And we might get there. That's certainly within reach. Spike pullback channel. Usually you get a bull breakout, which we have, and the market often gets all the way back to the top of the channel. I don't know that we'll get there today, but we might. Limit order bears 29 high, all right? You know, this big reversal, this big tail, weakens the bull case, and it makes me think that maybe we are entering a trading range. Different ways to draw the channel. Using the first reversal up. Some computers will use this as the channel. That's bad for the bull case, and probably means we're going to enter a trading range. As far as shorting below 39, wedge reversal, I would not. The 4-bar rally is too big to short without a second entry short. Let me just check something. So the height of the lower range is this, or more than, I'm trying to figure out, is this the top of an upper range? And if it is, then this might be the bottom. Again, big up, big down, big up, big down, big. Limit order bears made money despite a 9-point rally. The bears still made money selling. So increases the chances that we're entering a trading range. Look at that. I would not buy the 39 low, but I think the downside is probably limited, at least over the next few bars. I wouldn't buy, but a climax at resistance. So I would not take that buy. Not a lot of traders willing to take the buy because of the size of the reversal down from the 39 high. Bears might sell 39 high. They probably will sell above 39. Excuse me, they may sell the 41 high. They will sell above 39 because the bears who sold above 29 made money. What about selling with a stop on 42 low? I would not. I think unless we go sideways more, it's better only to be selling with limit orders. You can see bears sold the 29 high, scaled in higher, made money. They sold the 41 high, and they made at least 1 point. As for selling below 42, I'm not eager to do that because we have 6 bull bars here, and this was a surprise breakout, and therefore I'm not willing to sell below bars yet. To buy, I think bulls need a pullback closer to the moving average. So, maybe the 40 low area, maybe the moving average. I tried to sell the 41 high, and I clicked on it just a couple seconds too late, and I did not get filled. To me, I think this is interesting. This is Foot Locker, and down 26% today. Weekly chart, monthly chart. You know, Karen Fineman, whom I admire on Fast Money, has been bullish on Foot Locker forever, and yet it's lost more than half of its value over the past year. My fundamental problem, besides the technical issues, obviously it looks terrible. Weekly chart looks terrible. But my fundamental problem is when I go out to buy sneakers, I go into Foot Locker, and I don't think it's a great store. They don't have the selection that I want. I end up buying a lot of my stuff, most of my shoes, online. My tennis shoes, my running shoes. So it makes it hard for me to understand how anybody can be bullish when you go into the store. It's not all that great, and I know from my own personal buying, I'm buying online, and I'm an old guy. So what are the young people doing? The young people are probably buying online as well, and it makes me just look at the chart and question how anyone can argue that the company is going to do well near term. Good bar for the bears. When you have, this is behaving like a channel. Breakout, deep pullback, breakout, reversal, breakout, probably deep pullback, and then another bounce. But I still think we're going to end up in the trading range. I thought the trading range was beginning here, but we got this other leg up, and now this is probably the start of the range. And is the bottom of the range still down here? I don't know. It might be. Will we still get back below the 10 high? Excuse me. Right now, the odds are probably less than 50-50. The odds were 60% while we were here, but because we got this additional breakout, I think the odds are less that we get all the way back down here. Are we always in short yet? No, I think we're still long. And so this is therefore probably a minor reversal and the start of a trading range and not a bear trend. Big enough down, the bulls will probably wait at least for at least a micro level bottom to buy, right? Like here and like here. I want to say one other thing about the Foot Locker stuff. The reason why I buy all my stuff online, all my shoes, I wear just sneakers, tennis shoes, running shoes all the time. Once I find a size and brand that works for me, I can just keep ordering. Like let's say I got a Nike shoe, a certain size. Nike's always going to keep the size the same, and therefore I can just buy the same Nike shoe, the latest model of the same Nike shoe year after year after year, or I can buy a different Nike shoe knowing that the size will be the same. And the same with my tennis shoes and running shoes. So it's just really easy. And since I'm not, particularly in need of being very stylish, I'm just looking for comfort. It's just really easy just to, look up online, see something that looks reasonably appealing to me, and then I know my size, and I just buy it, and then it just shows up at my front door. And when I go to the mall, we go to the mall pretty regularly, just because it's fun. When I go into Foot Locker or any of those shoe stores, I'm just confused. I can get so much more selection online. It just makes me wonder who's buying shoes at these stores. So I don't understand their business model going forward. Big enough down, like 12, 13, probably sellers above, big enough down, like 30, 31, 30, 31, probably sellers above. So who's going to buy above 44? I think that's a problem, right? I think we're still always in long. We can continue to channel up all day, but more likely we're going to start to enter a trading range. I did not take a look at a measured move based upon this bull body to that bull body. We're right around there. Is it a small pullback bull trend? Well, we have a gap 10 high and these lows. We overlapped here, so it's not a gap. And to me, the pullbacks are fairly big here, here, here. It's a bull trend, but I would not call it a small pullback bull trend. It's a bull channel. This might be strong enough for a third push up. So 1, pullback 2, pullback 3. But I think there'll be sellers above the high of the day if we get there. And this is down strongly enough so that bears might sell above 44 as well. Again, looking for scalps. And bulls, they'll be buying below bars, maybe below 44 at the moving average, around the 35 low. Unlikely to reverse down relentlessly. If it does reverse down, it'll probably do the opposite of this, bull channel and then bear channel. And therefore, traders buying low, scaling in lower, should be able to make money. Most likely sideways. The bulls really are hoping to get this bar to close on its high because they do not want bears selling at the high of the bar. However, I think most bulls are not going to buy on the 44 high, and probably even with a good bull bar like that, a lot of bulls will not buy. They'll wait for a second entry buy. It's similar to this. What's different is this is a better looking bull bar than that, but the principle is still the same. The pullback is too deep, and that usually results in a trading range and not an immediate resumption of the bull trend. Five-minute chart of the ticks. Yesterday the ticks were below zero most of the day, consistent with the sell-off. And for the past 2 hours, the ticks have been mostly above zero, consistent with this. We hit 1,000 a couple times today. We hit negative 1,000 many times yesterday. Not enough bulls willing to buy, right? Trading range bar, probably buyers below at around the moving average, for example, and probably sellers above and probably sideways. It's about a 50% pullback from this breakout. So limit order market, buyers down here, sellers up here, both sides scalping. Getting near the end of the hour. Again, very tight bear channel. First reversal, usually minor, which means trading range. And the second hour's body is smaller than the first, so shrinking. And this hour almost certainly is going to have a smaller bull body than this. It may even have a bear body. So losing momentum. Strong enough reversals down here and here probably will get down to the moving average. So I would not be buying exactly at the 45 low. Bulls bought 1 point below 45 and at the moving average, but they'll probably scalp. They're hoping for a high 2 buy, but we may have to test lower or go sideways more. I think at a minimum we'll go sideways more. High 2 buy, but 3 dojis here, 3 dojis here, 2 dojis, maybe 3 here. probably a limit order market. Bulls buying below things, bears selling above things, and probably sideways. The fourth hour opened with bar 37. This is the open of the hour. And bulls are trying to prevent a bear body. So in the final minutes, they'll try to get 48. This is 46. They'll try to get 48 to close above the 37 open to have another bull body. But even if they do, the bull bodies are shrinking, and this hour's bull body probably will be smaller than the bull body of the last hour. We're probably going to be sideways for until 11:30 or so, maybe the rest of the day, but certainly 11:30. The bulls had a good bull body 44 until the end of the bar. It closed like that. They're trying to create another good bull bar here, but I think a lot of traders are switching to limit order trading, not stop order trading. So I'm not going to buy above 46. I'd rather look to sell around the 42 high. Where do the bulls buy? At the 35 low? There should be some buying there. We may come all the way down here. I talked early on that the open of the day might be a magnet at the end of the day. And this rally is so strong that right now I think it's, maybe less than 50-50 chance we'll get all the way down to the open by the end of the day. But if we keep selling off, it becomes, 60% chance that we get there, 70% chance that we get there. Tight bear channel. A lot of bulls will not buy above 48, even though high 2, 44. Bulls are buying probably with limit orders. They made money buying a point below 45, getting near the end of the hour. You can see big bull bar, medium bull bar, and then this hour, either a small bull bar or a bear bar. Wedge, typically 2 legs sideways to down, 1 pullback, 2. No. Usually if you have a wedge, the pullback lasts about half as many bars are in the wedge. So about 35 bars in the wedge, so you expect about 15 to 20 bars in the pullback. And therefore this is probably the first of 2 legs down. Also a tight channel, even if it has 2 legs, is probably still simply a larger first leg down. And therefore, if we go up here, we'll probably form a lower high major trend reversal, and then get a second leg sideways to down. Head and shoulders top, left shoulder, head, right shoulder. What about a stop entry buy above 48? We're still always in long. It's a 20 gap bar buy, a high 2. You can call it a wedge with 40, 43, but pretty tight channel. And it's probably better to be looking to buy with limit orders below things than with stops above. Bears probably will sell around the low of last week and the 44 high. Probably, at a minimum, the hour will be a reversal bar, a close below the midpoint. It might have a bear body. In any case, it's a bear reversal bar and a bear trend at resistance, and therefore the market will probably have to trade below the low of the last hour. That means it probably will have to trade below the 48 low. However, I think this is probably going to be a trading range, and therefore probably not a lot of sellers below the low of the current hour, not a lot of sellers below the 48 low. Bulls, you can see we're getting some buying, we're getting some reversals up, but they're all failing. We're in the buy zone near the bottom of the most recent leg up, near yesterday's close. You can see the reversal bar, but not a very strong reversal bar. The sell-off on the 5-minute chart, not all that strong. Probably buyers not far below. And if we simply go up, Probably sellers above, sellers around the 45 high. Trying to trigger the sell signal, a low one sell, 60-minute chart, but so climactic, probably a higher low and sideways. A low one after a sell climax usually does not go very far. Probably back to always in short. Bears want a measuring gap here. I still think probably buyers not far below. Support here. Probably bad follow through 51. So probably a bull bar on 51 or something wrong with the breakout. What about limit order bulls, 48 low? They'll probably make money. Remember, a trending trading range day typically will pull back below the top of the upper range. I did not, after this reversal up, I did not think we would get there, but right now it certainly looks like we probably will. Remember, the open of the day, I think, is the most important price of the day. I thought we were far enough above it so that it would not be a factor, but we're getting pretty close to it right now. Probably not much more down. The bulls are trying to get a bull body on 51 for a failed breakout. This is probably the first of two legs down from the wedge top. We're in the buy zone. I think the 35 low, these lows, and the 10 high. This is the general area for the bulls. Unlikely that we'll just keep selling off the rest of the day. More likely there'll be buyers somewhere in this area and it will bounce. It's important that the bulls were unable to get a bull body. Increases the chances that we'll get at least a small second leg down, one pullback, two. But I don't know that we'll reach a measured move down. This is still probably a bear leg and what will become a training range. I thought the training range was going to be here, and we broke up here, so now the training range might be here to there. Remember, 90% chance we're not going to get down here, but there's still a lot of room between where we are and here. We could keep selling off. This is probably the bottom of the range, somewhere right around where we are, so probably not much lower. If this is not the end of the first leg down, it's probably close to the end of the first leg down. A parabolic wedge sell-off. Might get a couple legs up to a lower high. Limit order bulls made money. We don't want to tick above the 48 low. Probably bulls buying below 53 and below 49 as well, even though we have magnets below. I think the most important magnet is yesterday's close. And I said on the open that today may simply oscillate around the open. As I said, I did not think we would get 10 or 12 points above it, but I thought the open of the day was going to be the most important price. Daily chart, the bulls trying to create a high 2 buy for Monday, and the bear is trying to get a follow-through bar after yesterday's sell-off. So the bears, at a minimum, want a bear body. They want today to close below the open. It's a pullback from the 50 breakout. 50 breakout might get one more leg down. Probably not much more down. Should be buyers somewhere, 53 low, 51 low, and down at the open of the day. Might not be able to escape the magnetic pull of the open, but we're in the buy zone. Bears want a measured move down here. What about selling the market? I would not. I think if you're selling, it's better to be selling pullbacks above 47, maybe above 51. And I think bulls will be buying either at a low 51 or 1 or 2 points below the low. And there probably will be buyers around the open of the day. Again, it's every bar that goes lower reduces the probability that we stay above this low of the day. It's still, probably 80% chance that we'll stay above the low of the day. For the bulls, they knew the bears would probably get a second leg down from 50, and this is the second leg down. We're so close to the open of the day that I think we probably have to get closer to it. We could either do it now or rally for 5 or 10 bars and then do it. Wedge, expect 2 legs down. This is 1 leg down. So if we rally 5 or 10 bars, we probably will get a lower high and then a second leg down. Limit order bears 51 made money, right? They either buy the 51 low and 1 point lower, or they buy 1 point lower. To do limit order bulls. Stop order bulls, will they buy above 55? I think if they're buying above 55, they have to use a wide stop, probably at least a few points below 55, which would be around the measured move down, maybe a little bit below the measured move down. Can you buy above 55 and put a stop below 55? Some traders do that. I had friends that I traded with years ago. They would do that and trade a half size, and then if it goes below 55, they'd buy more and have a full size position. And other friends in the group would buy a half size. They would stop out below 55. And then if we get another buy signal a few bars later, they would buy a full size. Can you sell 55 high? No, I think this is a trading range, and we're probably near the bottom of the upper range. And therefore, this is a buy zone. You buy low. I would not sell here. Also, the odds were we would get a second leg down after 50. This qualifies as the second leg down. So if 55 closes anywhere near its high, I would not sell at the 55 high. I would either buy or buy back shorts or wait to buy and wait to sell higher. Whenever a channel is tight, usually the bulls have to go sideways before they can go up. This is an okay buy, but as I said, we may go sideways more before we go up. And for the bears, I would get out of shorts and not look to sell for at least several more bars, at least 5 bars, maybe 10 bars, maybe some kind of double bottom and double top, maybe around the 49 high. I bought 1 point below 57 and scalped out. I did not buy on a stop here, but I think we're in the buy zone. This is probably going to have to go sideways, like this, and like this. For the bears, double top 53, but we're in a buy zone and we have a good bull bar 55. So probably buyers below 55 and buyers below 56 and buyers below 55. So I would not take the short. We might be always in short from those 2 bear bars and the wedge, but more likely we're forming a trading range and we're probably near the bottom of the range. I still think at this point it looks like we're going to get down to the open of the day by the end of the day, but I think we'll probably bounce either above 55 or after some kind of a double bottom before we get to the open of the day. What happens if we break strongly below the open of the day? I still think, at this point, 80% chance we'll stay above the open of the day, above the low of the day. So even if the bears get a strong reversal, it's probably going to form a higher low. Even though it's only a doji, it's still a pretty good bar for the bulls. The bears tried to sell off 56 and they lost. The market closed back near the high of the bar. "15-minute chart, 5 decent bear bars, reversal up probably minor. Tight bear channel, 5-minute chart, reversal up probably minor. Still have maybe a 50% chance of getting down to the open of the day. It looks like we're probably going to get an attempt at a double top here or here. Double top 53, magnet open of the day below, but stop order bulls made money 55. So I suspect that we're going to go sideways here and that there'll be buyers not far below 57 and buyers below 55 and buyers at the open of the day. But I think we're probably going to have to go sideways more, maybe form a triangle, first reversal up, first up, second up, and maybe third up. Looks like probably sideways here. We have a high 4 buy, high 1, high 2, bear breakout, and then high 1, high 2. Usually you get 2 legs sideways to up. So first pull back and then probably second sideways to up. I'm not sure that we're going to get down to the open of the day without first bouncing and getting a lower high. What about a stop entry buy for the higher low? The high 4 is the type of climax, consecutive bottoms. We've tried to bottom here, not a very good bottom. High 1, high 2. We got a bear breakout and a second leg down. And, this often leads to a couple legs sideways to up. And therefore, I think it's more likely that we'll go more sideways or a little bit up before we try to get down to the open of the day. So probably a lower high. This is the end of the 5th hour. You can see so far it's a weak sell signal last hour, a weak sell entry bar this hour, and that makes sense. We have a sell climax. You'd expect a couple legs sideways to up, first leg up, pull back, and then sideways to up. And we still have that magnet of the open of the day. Well, this is the minimum objective of the, from the high 4, 2 legs up, 1 pullback 2. And, I bought on the 58 close, and I've scalped out. But this is, I was expecting a second leg up, and we got it. Bear selling 57 high. I did not sell it. I have to wait to see what we get here. I think it's likely that we're going to get a lower high, and we'll try to get closer to the open of the day before the end of the day. Two legs up, 1 pullback 2, so a lot of bulls are hesitant to buy because our minimum objective is 2 legs up. A 50% pullback to around this high is also a reasonable target. We'll probably try to form a lower high. I think this is 1 leg down. Whenever you have a sell-off, even if it divides into 2, 3, 4 legs like this, when the channel is tight, it's usually the first of 2 legs down. And therefore, this rally is probably going to form a lower high. And we still have a reasonable chance of getting down to the open of the day. We can get there with just 1 big bar at the end of the day. I still think that's the magnet, and I still think we're going below the 55 low before the end of the day. It may happen on the final couple of bars of the day, but I think that's where the market is going. Unless the bulls do this, race strongly to the upside, the odds are this is a lower high, and this is where the market is headed. A low 2 and a lower high, but I did not sell it. I'm not planning to sell it. I'm going to wait. I'm not sure that this is enough bars up to be the end of the pullback from this many bars down, even though I think there's at least a 50-50 chance we're going to get down here. 2 legs up, so a lot of bulls are hesitant to buy, and 2 legs up, but small relative, not many bars relative to the number of bars down. We traded down for about 16 bars, and we rallied for about 6 bars. In general, as a guideline, if I have a bear trend and I see a pullback or a small rally, I like to see about half as many bars up as there were down. So a lot of the bears are wondering if the correction has ended or if it has to go up a little bit more. I still think we're going down to the open of the day by the end of the day. It's kind of interesting math. Here's the target, and this is where we are. If you sell right here at the market, is it more likely that we're going here before we get there? I don't know. If I were selling at the market, I probably would put a stop, a couple ticks above this high, maybe even above here. $15-minute chart, too many bear bars for it to go up very far. 60-minute chart, too many bear bars for it to go up very far. 5-minute chart, good rally, around a 50% pullback, but a very important magnet below. A few days ago I talked about this. I said these 2 bars really changed things because those 2 bars created a bear body on the daily chart here. So sometimes on the 5-minute chart, just a couple bars can affect the market, and those influenced me into getting short up here. Because of that bear bar here, I thought it was unlikely that we were going to continue much higher. So 5-minute chart, just a couple bars can be really important. And today, 5-minute chart, it would just take a couple bars to get below the open of the day. And if we do, then the daily chart would have a bear body, and that would increase the chances that we've begun a sell-off. On the other hand, if we close above the open, it would be a bull body, and it would increase the chances that we'll bounce. I still think we're going down. But if we have a bull body, it increases the chances we'll bounce again like this before we work lower. We're back into this trading range, and we're probably going to have a hard time escaping it. You know, trading ranges are magnets, and they tend to resist breakouts, and we're back in the middle of the range. We're probably going to test the low of the range, and we may test the high of the range before we test the low of the range. And I talked about Foot Locker. You know, Foot Locker sells a lot of Nike stuff. So if Foot Locker surprises everyone by going down like this, that means they're probably selling a lot less stuff. And since a good deal of what they sell is Nike, this is not good for Nike. They're telling us that, you know, going forward, we're going to sell a lot fewer shoes, and that includes Nike shoes. And this is Nike's response. So they also sold off. You know, I thought it was odd that when the stock market was rallying strongly here, Nike looked like this. You know, Nike could not rally strongly when the market's going straight up. So, you know, I thought something is wrong with Nike. I still think something's wrong with Nike. Here's Nike, the weekly chart. To me, it looks like wedge bull channel, wedge bear flag, bull channel, 2 legs up. It looks like a double top, lower high, major trend reversal. So, you know, 50-50 chance we're going to break below here and fall for some kind of a measured move down. Monthly chart, double top, lower high, and that would take us down here around a 50% pullback. Three dojis plus a big tail, 60. Not much interest in trading. Sellers above. The buyers below, I think, are around the open of the day. Not so much the, you know, at these lows, 61 low, 63 low. You know, I think we have to get down here. We may not be finished with the bounce from the sell-off, but I think this is where the market's going to try to go, maybe in the last 2 or 3 bars of the day. Bulls, double bottom bull flag, trying to get resumption up. You can also call it a wedge bull flag. We have a double bottom higher low here, and we have 3 pushes down, 35, 55, where the third push, 67, did not make a lower low. Still might get down to the open of the day. The bulls have a double bottom, bears have a double top, lower high. Most traders are scalping. We may wait until the final minutes to decide whether to get up near the high and turn the day into a good buy signal bar for Monday, or get back to the open and make it a good follow-through bar after yesterday's big bear day. It's a fairly big bar. I think that makes it a little bit less desirable for a short. You certainly can sell for a swing down, but we may end up staying sideways for the rest of the day. You know, here you get a triangle, and we have a magnet below. The bulls are hoping 69 is a pullback from this breakout. They see this as a double bottom, higher low, a reversal up from a bear channel, and they're hoping for trend resumption up. bull trend, deep pullback, trend resumption up, and the bears want the market to get down to the open of the day. I think the 3 buys were better than this simply because of the size of the bar. The risk is greater here. Can we get all the way down to the open of the day? I don't think so. Here's the daily chart. I think we'll probably close somewhere around where we are, maybe a little bit below the open, a little bit above the open. We spent the day, we went down, we went up, we went down. I think we went up too far for the day to end up with much of a bear body. I think this is interesting. We have the magnet of the open of the day, but the downside risk is probably small. So the best the bears probably get is a dip below the open of the day and not a move all the way down to the low of the day. We have a tight range. We have a double top or a triangle. Measured move down would be right around there, which is the same as the measured move down from the original bottom attempt here. So I think there will be buyers somewhere below the open of the day. It's still fairly early, and therefore I think we have plenty of time to drop below the target by 2, 3, 4 points, and then get back to the target, bounce back. We had that last week. Was it last week when I forgot what day it was. It was one day when we had a similar target. Maybe it was here, where we went below the target, above the target, below the target, all in the final hour. This was the low of that week from 2 weeks ago, and I said that it was an important magnet, and it was probably going to be a magnet all day. And we went 2 points below, 3 points above, back down to it repeatedly. And this might be what the final hour looks like here. Can you hold short for a swing down? My only problem with that is I think we're probably not going to fall. If we fall below the open, I think we're probably not going to fall a lot below the open. So if I were short here for a swing and we got near here, I would just take the profits. I would take a 4-point profit, because unlikely that this is going to go down very far. Now the bulls have a better wedge. 3 pushes down. 1, 2, 3. But we still have room to the target. We got to within 3 ticks of it, looks like. Now what about buying above 71? The bulls would need a good bull bar to convince traders that this was a full adequate test of the open, and that we may close near the high of the day. Again, from now until the end of the day, the entire process has to do with the appearance of this daily chart. Weekly chart, we already know there's probably going to be a tail on the bottom of the bar, so it's not as bearish as it could be. Monthly chart, there's still plenty of time left in the month. The month still could go upside down and get below last month's low. Right now, for the final final hour, I think the market is simply deciding what to do with the open of the day. Will today have a bear body and increase the chances that this sell-off is the start of a move down, or will it have a bull body and increase the chances that we might bounce? The bulls are hoping that today is a good buy signal bar going into Monday, but for it to be a good bar, they need this bar to close up near its high, which means they need the market to get up here. Right now, not likely. More likely, we're going to stay right around the open and have either a small bull body or a small bear body. Not a good looking buy. It's a wedge bull flag. 1, 2, 3. About 3 bear bars. Even though this one's a small body, it's 3 bear bars. Plus, we still have room to an important target. We only got to within about 3 ticks of it, so that lowers the probability of that for the bulls. Let's say it's a bull inside bar 72. I still think it looks like we're going to go more sideways to down. This does not look like the current kind of environment when we get a buy the close or sell the close finish. Too strong a rally, too weak a sell-off to make a sell the close finish likely. Tight trading range, big magnet. The past 20 bars in a pretty tight range. Pretty good move down. I think that makes a buy the close finish unlikely. So we're probably going to have a trading range finish. Probably oscillate around where we are. Maybe a few points lower, maybe a couple of points higher. Bulls trying to get a micro double bottom for their wedge bull flag. 71 did not get close enough, but if we get a micro double bottom 73 with a decent bull bar like 67 or 55, I think bulls would be more willing to buy. Not good enough for the bulls. If 74 is a bull inside bar, traders will buy above it. If it closes on its high, does not get too big. You can see bears are losing hope. They're not getting a quick magnet, a quick sell vacuum down. So not much interest in going lower. The bears might be giving up. They tried to get down here, could not get a big bear bar. Tried to get down here, tried to get down here, could not get a big bear bar, so the bears might be buying back shorts. And for the bulls, not a very good looking buy. A micro double bottom is good, or triple bottom, and a wedge bull flag is good, but not a good buy signal bar, any of these 3 bars. For the bulls, bear trend, minor reversal, but a very strong one, strong enough to make traders wonder if a higher low will lead to a major reversal. So this is a higher low major trend reversal. Not a good buy signal bar, plus a 20 bar tight trading range. A little bit late in the day to be trading with limit orders. The bears who sold 1 point above 73 scalped out. That reinforces the limit order environment. And the bulls did not get a good buy signal bar, 73. And for the bears, 4 bar tight trading range, not a good sell below, and for the bulls, not a good buy above. Bulls still trying to get a wedge bull flag on the 5-minute chart and a higher low major trend reversal on maybe the 15-minute chart. but tight trading range, and we're running out of time. And day session, not a good buy signal. Normally, if you're going to get a swing, you get either a good-looking buy signal bar or a strong breakout. And it's probably too late for a strong breakout, and the bulls are not getting a strong buy signal bar. So it looks like we're still waiting to decide what to do with the open of the day. You look at that and you say, how can that possibly happen? The market's doing this. How can it ever get back to the open of the day? I'm always amused, even after doing this for 30 years, I'm still always amused that, coming into the day, on the first part of the day, I talked about how the most important price of the day would be the open of the day, especially at the end of the day, and the market might get back to it and then decide whether to close a little bit below it or a little bit above it. And then we get this very strong reversal up, and it looks like we probably will not get there. And then we just kind of pull back endlessly, and bulls are making money, buying with limit orders, and then through here, buying several times with stop orders, the bulls are making money, but it does not matter. Here we are at the end of the day, and we came all the way back to the open of the day. To me, it's entertaining. Through here, I think this is fairly easy to buy. I did not take that sell, and I obviously did not buy, but it's interesting to me that here we are back at the open of the day. You can see it's important. Even a one-tick bear body increases the chances that yesterday's sell-off will lead to a swing down. A one-tick bull body slightly reduces the chances, but I think this is good enough follow through, even closing around the middle, even with a small bull body. It's good enough follow through to increase the chances that we're going down. The most important thing was the bears needed to avoid a pretty strong bull bar, and it looks like they will succeed. Because this is a bull leg in a trading range, and this is a bear leg in a trading range, you have to assume bears will be disappointed by the follow-through like this, and this is a doji. Even if it's a bear doji, it's still a little bit disappointing. However, I still think the odds are this is the start of a trading range, a bear leg in a trading range that's going to go all the way down here, but it might take several months to get there. I think difficult to do anything right here. We're at the target. And, as I said, I doubt that we'll get down to the low of the day. I said that we'll probably stay fairly close to the open of the day for the rest of the day. It would be good for the bears, obviously, to have today close all the way down on its low. We have that measured move target right here. So I think we probably will not fall much below that. And if we get there, I think 50-50 chance that we quickly reverse back up to the open and close within a point or so of the open. If I had to do anything right here, not enough time left for me to do it, but I would be scaling into longs 1 or 2 points below the open of the day, betting that we're not going to fall much below the measured move target from this trading range. My VXX, still doing well. 240-minute chart. We might break above here and go up for a measured move, head and shoulders bottom, left shoulder head, right shoulder, or you can simply call it a higher low major trend reversal in a trading range. And that would take us somewhere up here. This is a second leg down. Let me just check leg 1, leg 2. I don't think we're at leg 1, leg 2. That would be down here. This is a good example of how the market often does things at the very end of the day that are really important. 130,000 contracts on that bar. We're at the target, the measured move from this trading range, and you can see the limit order bulls bought a couple points below the open of the day. Yeah, really pretty fascinating day. Monthly chart might become an upside down month. We have a parabolic wedge and a very tight channel, 1, 2, 3, and we have a high one buy after a buy climax. Usually the market goes up 1, 2, or 3 bars. Here it went up 4, 1, 2, 3, 4, and then it usually pulls back for a few months, maybe to the bottom of the high one buy, which is that April low, April, May, March, April, May lows. Weekly chart, finally, we're very close to the weekly moving average. You can see it's at 24.12, and today's low is 24.20 or so. So we're within about 8 points of the target. But as I said, I think we're going to fall below it, probably 50 points below it or so. I think we're probably going to get down here over the next few months. It took several months to get up here. It might take several months to get down here. A lot of times sell-offs are faster than rallies, so it's possible that we get down pretty quickly. Probably we'll get at least 2 legs down, and we're working on the first leg down. And daily chart, at a minimum, the bears are trying to get a bear body to increase, to validate yesterday's breakout. That would be 2 closes below that low, and it would be a bear bar, follow through bar. And that increases the chances that this is in fact a reversal and that we're going lower. Well, yesterday, an extreme sell climax. You get a couple days like that a year, and 50% chance you're going to get some follow through selling on the open or in the first 2 hours. And we got a little bit. And then 25% chance today would either be a strong bear day, it was not, or a strong bull day, and it was not. And 50% chance that it would spend a lot of time going sideways, which it did, even though we had a strong reversal. We had a higher low major trend reversal, and then we had a wedge up to resistance, the close of last week, and last week's low, and reversed down in a couple legs, 1 pullback, 2. I thought a couple things were pretty dramatic going on early on. I said early on, 1 and 2, I said nobody's going to sell at the close of 2. The same with 5 and 6. So at the time that those were happening, we have this. And my question was, who's going to sell? Who's left to sell? All this, the strong bears have sold way up here. They're looking to take profits. If it does not collapse, they're going to buy back their shorts. And the weak bulls got burned all day yesterday, losing money, kept trying to buy reversals, and they're not going to do that today. So they're not going to get trapped into losing longs that they have to get out of. And then who's left to sell? The weak bears, are they going to sell? Some might, but there are not enough of them to drive the market down. And then that leaves you with the strong bulls and the strong bears. The strong bears are going to say, wow, this is a parabolic sell climax, and it's a tremendous gift. Theoretically, my stop is here or here, which is very, very far. I don't want to risk that much. I want to reduce my risk. I got to buy back my shorts or part of my shorts. So you have strong bears buying, and you have strong bulls saying, parabolic sell climax, probably going to go sideways to up for at least a couple hours, starting pretty soon. It's worth looking to buy. It would be nice to get a good buy signal bar. 3 is not all that good, and neither is 6. But an alternative way to get long is if you get a strong bull bar, which we have on 7. Problem with 7 is 8, not a great follow-through bar, and we might be getting a double top opening reversal down from the moving average. Also, when you have a bear channel that's this tight, every one of these reversals is minor. Every one of them. This one is minor. But if you get a pretty strong minor reversal, the next reversal could be major. It increases the chances that the next one could be a swing. So this is a minor reversal. It's possible it goes all the way up here, and if it does, it's still a minor reversal, but it's a strong one, and the market could become always in long. If it goes straight up here, traders will look to buy a major reversal, a higher low major trend reversal. Instead, we made a couple attempts to get above the moving average. Does not look good. So for the bears, this is a reasonable swing short, but it's probably going to be a trading range. I think we're probably always in long. For the bears, you can call it a double top opening reversal down from the moving average, a 20 gap bar short, it's been about 30 or 40 bars. It's also a wedge bear flag, 1, 2, 3, with a decent sell signal bar. I think the bears will make a scalp, but I also think that we're probably always in long, and we're probably going to get a higher low. If we do get a new low, I think it'll be a lower low major trend reversal. I think we're going to get a major trend reversal. Sell the high, bears 6. We will scale in higher, sell more below 10, and 13 let them make a profit. However, 13 does not look like a convincing higher low major trend reversal. Those two bear bars make me think we have to trade down at least a little bit more. And this is the second leg down, 16, but a tail on top of 17. Not a good buy signal bar, especially right below the moving average. And also, why the higher low 16 versus 13? A bad buy signal bar at resistance, probably we're going lower. We probably have to get down to the 13 low, maybe a little bit below, which we did here. 21, you can call it a wedge bull flag. We have a bull reversal, 3 pushes down, 1, 2, 3. And you want to call it a high 2, high 1, high 2. Not a good looking buy signal bar. A lot of traders expect a rally. After the first bar, we went down to a new low, reversed up. We went to a new high, reversed down. We're in breakout mode. The bears tried to break out below the 6th low and failed. So a lot of traders either buy above 21, expecting the market now to try to break above the high of the day, or they wait to see 22 form and then buy as 22 is forming, because if it starts to go up quickly, it's probably going to try to break above 10. Bad follow through 23, but I think we're always in long. We're well above the moving average. The bears have a moving average gap bar, but the context I think is really good for the bulls. So I'm only either long or looking to buy. Another breakout, 24. Bad follow through for a few bars, but still always in long. So buyers below, buyers above. I don't know how much higher we go, but I think we'll go up at least a little bit more. Big surprise, 28, 29. You can start thinking about parabolic wedge, 1 or 1, 2, 3, or 1, 2, 3. But big enough surprise, probably going up a little bit more. And then we got a pretty big reversal down. So big up, big down, big confusion. A lot of the bulls will want a double bottom before they buy. So you can buy above 32, but stop probably at least a couple ticks below here, maybe lower. But we're probably going to get a micro double bottom, which we did. 35, not a good looking buy signal bar. You could buy above 36 if you prefer to buy above a bull bar. And then we had that surprisingly big bar, 39, yet it had that big tail on top. And I said that that's a problem, and that this is probably the start of a trading range. 40, 41, a high one buy, but a wedge top at resistance, and plus we have the magnet of the open of the day below. So, I would look to buy a pullback. I'm not going to be buying up here. The limit order bears made money selling above here, selling above here. They're going to be selling. They're looking to sell. High 2 at 44 for doji, 2 bear bars. High 3, 46, but a bear bar. Looks like we're going lower, maybe down here. Maybe 1 tick below the top of the lower range, maybe all the way down to the open. Surprise bear breakout, so probably a couple legs down. Okay, so it's consecutive bottoms. We tried to bottom here, failed. We got a bear breakout and a second leg down, decent bull bar. In the buy zone, somewhere between the 35 low and the open of the day, traders will be buying. So okay buy, but a tight channel, so minor reversal, and bulls will be scalping. Another buy, 59. another buy here, a double bottom, higher low. Is this the second leg down? One, pullback, two. I don't know. Doesn't look comparable to this, so looks like more of a trading range. Plus, we still have that magnet here. And then the bear 69, a double top, lower high, or a triangle. Might be the start of a bear move down to the 60-minute moving average. Down to the open of the day. And this is where we are. With a few minutes to go, deciding whether to close above, below, or at the open of the day. For stop entries today, even though the bulls ended up with a very impressive rally, 39-point rally, 19-point rally, they did not get good buy signal bars anywhere through here. Stop entries in here. I would not take any stop entries. I would not, maybe buy above 9. I would not do that. Why the doji bar? Why is it just below the moving average? And then the first stop entry bar that I thought was reasonable was 21. We tried to break below the 18 bar range and failed, and we're reversing up. But it's only a doji bar, so I ended up buying as 22 was racing up. And then 26, okay buy. 32, okay. But I thought we might get a second leg down, which we did, 35. So if you buy 32, stop at least down here. And then up here, probably a little bit more up here. And then here, it's over. This reversal down is too big. So this is probably a trading range, and I don't want to be buying at the top, even with the bull bar. We have a wedge and a big reversal. And then through here, I did not sell with a stop below 42, but turned into a good swing down. And then not really good stop entries anywhere through here, buying or selling until you got to 55. And then you had a buy 55, 61, 66, 67. And then the bears had a sell below 69, maybe below 75. And then with the bulls buy above 79, it's too late in the day. I would not. Buy the close, sell the close. Well, theoretically, 1 and 2 are sell the close, and so are 5 and 6. But it scares me because I think we're going up, and I don't want to be selling at the low. And even if you sold the 6 close, you still could at least avoid a loss. You sell the 6 close, you wait for a bear bar 10, you sell more right below 10, and then you place a limit order to get out break even, and you get out break even here. Buy the close, I thought 22, 23, 24, 25, 26, 27, 28, 29 are all buy the close, and then probably 37, 38, 39, I would not buy the close. It just reversed down too much. And as far as sell the close here, 44, a bull bar instead of a bear bar. I thought it was a sell above, but not on the close. And for the rest of the day, it was not really buy or sell the close. Limit orders, really pretty tricky. You had to be pretty courageous taking limit orders here. You knew there had to be buyers below 4. But we could still go a lot lower before you could make money. So most traders should not be doing limit orders in here. And then up here, probably buyers below 8, that's reasonable. Maybe sellers above 9, but I think we're always in long. Probably sellers above 13, probably get a second leg down. And then here, 80 the first, 30 the first pullback, but not a good looking buy because possible parabolic wedge, 1, 2, 3. Probably buyers below 34. I thought there'd be sellers above 41 despite the 6 bull bars. And then here, easier, sellers above 44, probably sellers above 47, and probably buyers below things, below 43, below 48, 51. And then through here, buyers and sellers, sellers above things, buyers below things. And then here, it's too late in the day to do anything. But fascinating day, really, really fascinating day. Very important day. We got 30 seconds left before the day closes. And you can see where we are deciding, are we going to get a bull body or a bear body or just a perfect doji bar at the end of the day? What is the best way to trade bar 22? Well, before 22 opened, let me get rid of that axis on the right. Okay, so we ended up with a 1-tick bull body on the daily chart, right? So the minimum that the bulls can get for a failed bear breakout. I think it's important. I think the 1-tick bull body, it has meaning. It's telling us that the bears are not as strong as they could be, but it's obviously not a very good buy signal bar for Monday. High 2, 2 legs down, 1 pullback 2. Okay, so what's the best way to trade bar 22? Coming into it, I thought I wanted to buy above 21, and I did not buy with a stop because of the 1-tick bull body. I probably should have bought. If I just looked at a bar chart, it would look like a pretty good buy. Here's a bar chart, so it looks like a wedge bull flag and a higher low major trend reversal. But I ended up, because I wanted to buy, and I keep saying either we're going to get a good buy signal bar or we'll get a strong reversal up. And I'm looking for either one. I did not get the good buy signal bar, and therefore I'm looking to buy the strong reversal up. And you can do it any way you want. The easiest way to do it is just buy the market. As soon as you think, hey, this is going up, as soon as you start, I tend to buy at the market or with quick limit orders during breakouts like this. And a lot of times, let me just put up a 1-minute chart. Here's the market. You can see this is a 1-minute version of it, this bar 21 right here. And you can see we got a surprise breakout. And look at the close of this bar and the open of that bar. What does that tell you? It tells you that as soon as this bar closed, a whole bunch of traders just hit the button to buy the market. And that's why the open of the next bar is above the close of that bar. And I forgot where I bought. I bought somewhere on one of these 2 bars, and I just buy the market. Sometimes I'll place a limit order to buy the low of the prior bar, like buy this low, and then just hold on. You put a stop down here on the 1-minute chart, hold your nose and wait until you get a breakout, and then you can lower the stop to here, and at that point your risk is really small. You just ride it up as far as you want. But I think as beginners, it's really easy to get messed up on buy the close, sell the close bars by trying to get the perfect price. For example, as soon as the bar closes, putting a limit order to buy at the close of the bar. I think in general, most traders, it's just better as soon as you think it's buy the close, say those 3 words and do what you're saying, right? So if it's buy the close, I think in general, most traders should just buy the close, even though if they wait for the bar to close and place a limit order at the close of the bar, probably 90% of the time they'll get in 1 tick better. But I think it's better, right when the bar closes or, 2 or 3 seconds before the bar closes, just hit buy the market. I think that's the easiest way to do it. Once I think the market's going up, the context was really good for the bulls. So as soon as I think the market's going up, I either look for a good stop entry, and if I'm not happy with the stop entry, I wait to see the market start to go up, and if it starts to go up fast, I just hit buy the close. Sometimes I got a new mouse on my other computer, and sometimes when I hit the mouse, for whatever reason, sometimes it trades a double position, and I wish that it did it here, but it did not. But sometimes it does, and and then I have to deal with that. Question: with the recent big surprise moves, I find myself hesitating on taking trades that I usually would take. How do you overcome this, or have you overcome it in the past? Yeah, I totally understand that. When the market is making big moves, especially big reversals, it's really easy to say, it might reverse on me. I don't want to be buying at the high of a bull breakout that is going to reverse. I don't want to be selling at the low. I just try to pay attention to the context. And it's really important to trade small enough so that, if you lose, it's no big deal, right? I lose every day, and I win every day, but I don't get upset by my losses because I could trade a lot bigger. Everybody could trade a lot bigger. I have a whole bunch of accounts. I could be trading an incredible size, but I don't because I want to be happy and I don't want to be stressed out. And so everybody has a comfort level, and I think you just have to find your comfort level and stay within it. And don't worry about getting rich. Just worry about doing the right thing. And if you do the right thing, you can slowly increase your position size, and life can then become magical. It can become unbelievable. Okay, question: do you primarily just trade one forex market these days, or do you trade only the major pairs? I have to say, over the past many months, I've been trading exclusively the euro versus the dollar, simply because I cannot do too many things. I'm trying, I have a whole bunch of stuff going on. I got personal stuff going on. I got the trading. I got all the writing. I got the trading course going on. I just cannot do too many things without making mistakes. So I just trade the euro versus the dollar. However, there are obviously a collection of very popular crosses. Everyone knows them. It's no secret. The major markets are the euro, the dollar, the yen, the British pound, the Australian dollar, the Canadian dollar. And some people trade New Zealand. Some people trade the Swiss franc. And then you got minor ones, the Dutch krona, and some people trade Norway. And then, a lot of people don't even have data for some of the smaller ones, Mexico, for example. But, I think you can go crazy looking at all the courses. 10 years ago, I used to look at all these stupid Forex charts trying to find relative strength. If 5 markets are going up, I try to find the strongest one. If 5 markets are going down, I try to find the weakest of them, and then I try to trade the cross of the strongest, buy the strongest and sell the weakest cross. And now I say, it's not worth it. I just look at the euro versus the dollar. If it's going up, I'm buying. If it's going down, I'm selling. And and I don't worry about everything else. Could I switch and trade Forex exclusively? I could, and certainly if I wanted to trade daily charts, and I could certainly trade the handful of major courses, the 6 or 7 major courses. But as I said, I got so much going on that I don't want to add anything else, and therefore just trading the euro versus the dollar is good enough for me. All right, I think really exciting time, and this is meaningful. Someone who's not paying attention would not realize if they were unaware of what's going on, they would not think anything about this. They would say, oh, the market went up, it went down, it closed somewhere in the middle. No, it didn't close somewhere in the middle. It closed one tick above the open, and on the daily chart, that put a bull body on the bar after a strong bear breakout, and that weakens the bear breakout. I still think there are sellers above, and I still think we're going lower. However, that is important. If the bar closed on its low, we probably would go a lot lower, a lot faster. If it closed on its high, we probably would trade all the way up here pretty quickly. But it closed in the middle, so it's modest follow-through selling. But that one tick bull body is a reminder that this is probably not a strong bear trend. That if we were going down, we're probably going down in a bear channel. Just like when the market was going up, traders were able to make money, selling above things and scaling in. Well, going down, bulls are probably going to make money buying every new low, using wide stops and scaling in. This little one tick bull body increases the chances that this sell-off is going to be a bear leg in a trading range. And that means limit order bulls will probably be able to make money all the way down. So it's important. Okay. Hope everybody has a good weekend.